and you've been wondering whether you should move it into your LLC, you are watching the right video. As a tax strategist at keepmost.com, I'm going to break down step by step exactly how to place your home into your LLC. I'm going to show you the right way to do it, but more importantly, I'm going to show you where people make the biggest mistakes. You know, the kind that blow up their mortgage, void their insurance, and hand the IRS a reason to come knocking. So let's start by clearing up a massive misconception. I hear it constantly. Keran, I need my house in the LLC name to get the tax benefits. And no, you don't. That is a myth. If you rent the property out, the IRS allows you to deduct the mortgage interest, property taxes, repairs, depreciation, management fees, all of this, as long as you maintain proper records, document your rental use, and correctly establish your basis. You do not need an LLC for any of that. And if it's your primary residence, well, the mortgage interest deduction, the property tax deduction, and even the $250,000 capital gains exclusion, or $500,000 if you're married, those are all tied to your personal ownership. So transferring your primary residence into an LLC may jeopardize every one of those benefits. But I'll come back to that later. So the question remains, if the 90+ tax deductions at keepmost.com are often the same or worse inside an LLC, why would you even consider doing this? And it's the same reason as always, liability. Think about it. If a tenant slips on a wet floor and breaks their hip and they want to sue, the lawyers are not just going to look at your lease agreement, they're going to look at who owns this property. If the deed says Jane Smith and not Smith Holdings LLC, your personal assets like your savings, other properties, retirement accounts, all of that could be exposed depending on the claim and your state's laws. So title in your name equals your personal financial life is potentially at risk, but title in the LLC's name means that liability is generally contained to what the business owns, provided you maintain proper formalities and haven't given a court reason to pierce the veil. So the whole game of moving your home into an LLC is asset protection, legal separation, and at the core, separation between your investments and your personal financial life. Now, let's talk about how to actually do this the right way. And step number one is to transfer the deed. The deed is a legal document that proves who owns the property. So transferring a home means executing a new deed and recording it with your county. How you do it depends entirely on your situation. So if you have a mortgage, I want you to stop right here, because this is where most people make a very expensive mistake. And that's because your mortgage almost certainly contains a due on sales clause, also called an alienation clause. And here's what it means. If you transfer ownership to anyone, including your own LLC, without the lender's permission, the bank has the legal right to call the entire loan balance due. Now, the truth is, some lenders don't exercise that right immediately, especially if payments keep coming in, but that is at their discretion. Most of the time, it doesn't happen, but I've seen cases where it does. So you are betting your property on the hope that they don't notice. So option number one is to contact your lender and ask, right? Many will grant an exception if the LLC is owned entirely by you and the loan stays in your name personally. Now, option number two is to refinance into a commercial loan under the LLC. Now, this is the cleanest move. The debt and the deed transfer together, but clear warning here, commercial loans do come with higher rates, shorter terms, and stricter underwriting. A new LLC will almost certainly require a personal guarantee, but the title is in the business's name, and the legal separation there is real now. If the home is free and clear, now all of this becomes a lot simpler. Now, the type of deed varies by state. You have quitclaim, warranty, or special warranty, so confirm with a local real estate attorney for which one is best for you. But also check what transfer or documentary stamp taxes your state charges at recording. Some states are very aggressive about this, so know before you go. And here are the steps. First, you draft a deed with the legal description of the property, not just the address. You want to copy the exact legal description from your current deed or county records. Then you want to sign it in front of a notary. Most states require the grantor to sign before a licensed notary public. Some also require witnesses. Next, you record the deed with the county. This makes the transfer a matter of public record, and the LLC is now the legal owner. But I have one more warning for you. Transferring real property can trigger a property tax reassessment. Some states treat a deeded transfer to an LLC as a change of ownership, and they reset your assessed value to current market value. Now, California has specific rules under Proposition 19. Some states exempt single-member LLC transfers, but others do not. You are also going to want to create a capital contribution agreement. You cannot just hand over the keys and call it done. You want to draft a simple agreement that states, John Smith hereby contributes to real property located at the address to Smith Real Estate Holdings LLC as a capital contribution with a fair market value of whatever the appraised value is. This documents the transfer as a legitimate business transaction, but you should know that this document alone does not establish your tax basis. You see, basis is governed by tax rules, carryover basis, debt assumed, prior depreciation, contribution rules, right? So file this in your business binder alongside the recorded deed. Now, step number 2 in this process is to get the right insurance. Imagine this, you transfer the deed, the LLC name is now on the property, so you feel protected. But then your tenants slip on the icy front steps, or a tree falls through the roof. You call your insurance company and the policy is still in your personal name. Now the adjuster sees the mismatch there. Personal policy, but LLC owned property. And they may deny the claim entirely depending on your policy terms and the facts. Now, why would they do that? Well, because a personal homeowner's policy is priced for an individual in a personal residence. And the moment that property transfers to a business entity, the risk profile of that policy, well, it changes. They price the personal risk and your LLC exposes them to a commercial one. So that mismatch gives them grounds to dispute the coverage. You could be sitting on a 6-figure loss with zero coverage. Now the fix here is to update your insurance the same day you record the deed. For a rental inside an LLC, you need a landlord policy or a commercial property policy with the LLC listed as the name insured. This covers the structure, lost rental income, and liability claims from tenants or visitors. Now, coverage depends on your specific policy terms. Yes, it does cost more than a standard personal policy, but the premium is 100% business expense. You are buying a bigger shield there with pre-tax dollars. Now, it would be criminal if I did not mention this. And this is the critical warning for primary residences, and that's the homestead exemption. You see, here's the one that catches people completely off guard when they make this move from a home to the LLC. Most states offer a homestead exemption, right? It's a reduction in the assessed value of your property residence for property tax purposes. Florida exempts up to a certain assessed value. Or take Texas, who has a residence homestead exemption that includes a school district exemption. And all of this saves you real money every single year. But the catch is that most states only grant this to natural persons, aka human beings. An LLC is a legal entity, right? It's not a person. So transfer your primary residence into an LLC, and in many states, you lose that homestead exemption. And to make matters worse, in some states, the homestead exemption protects your property from legal issues. So the bottom line for primary residences is that in 99.99% of chances, your personal home stays in your personal name. If you do want protection, use a strong umbrella insurance policy to manage liability instead. The LLC strategy is almost always better suited for rental properties, vacation homes, and investment real estate, not the house you live in. But the bottom line is simply this: placing your rental or investment property into your LLC is one of the most powerful moves you can make as a real estate investor, because protecting yourself and your investment is the highest ROI thing you can do, but you have to do it right. Now, hopefully this was helpful for you. Make sure you like this video. It truly helps it reach more people who need it. My name is Keran, and as always, I'll see you in the next video. Take care.